Hello traders, Gary Wagner here. Just about 10:40 in Honolulu, 3:40 in New York. Equities are still trading, have about roughly 20 minutes left to go, but as of right now it's trading slightly down on the day, off about 8 points at 17,140. Now, we have seen this market trade to 17,195, the low 38. So we are certainly closer to the high than we are the low, but we are still trading off on the day. Of course, dragging the market down has been crude oil. We'll certainly want to take a look at that. And as we look at our S&P, that is also trading lower on the day. S&P is trading off about 1.25 points at 2008 on the day. So traders, as you can see, not that much time has gone by, but we do now have the S&P trading higher on the day at 2010.50. Now, I had been considering whether or not it really made sense actually executing a trade and getting long in this market. And here's my sense, and here's what I'm seeing right now. The first thing that we've got to realize is we do have this potential bottom when we take a look at this particular price point at around 1980. Of course, this is the E-mini on the S&P. You can see now two periods in time in which we have had the market come, test these lows, but effectively bounce off of these lows to move higher. This last time came in, roughly December 14th. The market had just traded from a high of 2109, came down and hit these lows here, and then came in. Now, it did make a lower high, trading, roughly above 2060, call it 2065, and then came down on this particular correction that it had following this small rally. It did also make a higher low. So we had a higher low. We also had a lower high. So we had basically consolidation within the market. And then we basically had, in essence, a double top come into the market. And this, of course, came in at the end of the year. And then, of course, since then, we have seen this market for the last three trading days, this being effectively Monday and this being right before the new year right here, these two down days, effectively trading lower. And yesterday is when we saw this low. So we've had a really nice bounce off of the low, but we certainly are not getting a clear-cut signal that this market wants to move higher. Of course, the main instigator, I believe, or one of the main instigators in this particular decline has been crude oil. Crude oil continues to plummet. This is a 60-minute crude oil chart, and you can see that from the open, here is the opening on the 5th. Let me go get my pointer, but here's the opening on the 5th. Market opens effectively and trades sideways for the first 4 hours of trading, and then it really drops. It drops down just to about 36.20 is this low right here, but then effectively throughout the rest of the trading day, it meandered lower and lower hour by hour. So traders, another market that we should be paying some really close attention right now to is the dollar. Dollar trading back near resistance at 100, currently trading at 99.41. It is putting it up on the day. Take a look at this daily chart, and this daily chart takes us back to June or July of last year, and that's when we saw the most dramatic rally mode go into the market, in which we saw it trade from, in terms of the index at 80, up to the index at 100 before it stalls right in this particular area. It comes down, doesn't quite go to the 38% resistance area. It doesn't really test it really until about September of last year. And from there it traded sideways and then took a stab, this being at the end of, or excuse me, the beginning of December. We had a stab back to 100 and then it fell back. We have really earmarked 99 and 98 as our support level, and we've got that in terms of the marketplace itself. You can see these series of bottoms here, but we're now very, very close to, as you can see, within a half a point of this record area. Now, when I say a record area, I'm talking about a 5 or 6 year time in which the market has not been to this place, but realize the dollar index has been to 120. It's actually been to 140. So we're not in uncharted territory, so to speak, but it's certainly something that we want to watch, especially the fact that we have had treasuries firming up, the fact that the interest rates were boosted last year, so we had liftoff, should be fairly supportive for the dollar. So we're certainly going to want to watch that, but I think quite honestly, our next play has got to be in the Standard & Poor's. And I think that will allow us to have the greatest potential. Now, as I said, I didn't take a stab at it today. We've got roughly 10 minutes in trading, and we're still flirting between up a little bit and down a little bit. I will need to see at least one more day of supportive action in the market. But what I can tell you, and what I find to be very, very solid in terms of a positive statement, is the fact that these lows at around 1980 were once again tested, and in fact they did hold. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.